Good morning, everybody. Welcome to ECB Day, Thursday, 12th of September, the biggest central bank meeting we've had since the last biggest central bank meeting we've had. Morning, K-Man. You all suntanned up?
Good morning, Ryan. Good morning, everybody. Well, I mean, it's a bit tough to work on a suntan here in the southwest of England right now.
God, tell me about it. It's like a switch has been flicked. We've gone from summer to autumn and probably winter by the end of this week, if the forecast is to be believed. 7 degrees, 4 degrees likely on Friday, and already snow in Scotland. Oh dear, summer's going to be in the rearview mirror quick enough. Anyway, let's not think about that just now. We'll think about what's going on in trading. As always, we're going to start off in China. There's a story out that they're going to cut mortgage rates on around $5 trillion worth of mortgages as soon as, well, it says as soon as September. We're in September, so any time now. This is something that they had touted previously, that they may look to do something in the mortgage market to ease things there. As we know, also previously, some of their bigwigs talking about potential RRR cut too. So we're on the watch for more rate cuts from China. A bit of data out of Japan. We've got some PPI data coming in, which year on year up, but not as much as expected, and down on last month on month, negative at minus 0.2%. Probably doesn't change too much in terms of the Bank of Japan, but obviously they'd rather see more continued positive numbers than the negative numbers seeping in. But obviously energy prices are a big part of that, and what's going on in oil and the likes also may be filtering through to those price moves as well. So as I say, not something that's going to sink the path for the Bank of Japan, as reiterated by BOJ's Tamura, who says we need to raise rates in a timely and gradual manner. He's one of the hawks over at the BOJ. He says the neutral rate is likely to be around 1% at the minimum. We must raise short-term rates in several stages while scrutinising how the economy and inflation responds to such steps. Must raise rates at appropriate timing and in several stages. The pace at which the market expects the BOJ to hike is very slow, and hiking at such a pace could further heighten upward inflation risks. So that's him saying that he doesn't maybe want to take such a slow approach as the market expects. He says data out so far shows Japan's economy is moving in line with forecasts made in their July meeting. He said that there is perhaps too much priority on market stability, which may impede policy, too much caution. So pretty stronger in the hawkish side, obviously being a hawk, that's to be expected, but a bit stronger, Kay, than we've had from some of the others.
Yeah, and we must admit that when we listen to Ueda, he seems to be listening more to those people than the doves right now. Okay, so I'm not going to completely dismiss those comments from Tamura, but yeah, that PPI, I don't think it's going to change much either, unless we see a continuation of that trend, obviously, and dropping under 2%, dragging the CPI down. So for the time being, I think just continuing what they are saying, and we're always gonna hear different stories from hawks and doves. Interesting as well is that number on the bond buying. It seems that they are largely done right now. It's the first week that we see a negative number in a good few weeks. So it may hint that the Japanese money is working enough right now. So there's perhaps an interesting one as well to note. Although I think most and really a huge percentage of what they bought lately was completely hedged. So that has very little impact on foreign exchange by doing so.
Yeah, it's funny. We get a number like that showing a big selling in Japanese stocks, and then you look at what the
Yeah,
Nikkei did overnight, and it's
yeah.
it's a completely different kettle of fish. Big move yesterday, some 3% ish or whatever. I think
There's
it
there's
finished up.
there's
There you go,
there's some
3.4%.
Yeah, there's something in this market, Ryan, which is I don't know whether it's the real money community not being really involved, or machines just not thinking about what to do. But everything that happens, whether it be in equity markets, when you see those moves in the S&P as well yesterday, and those Nikkei moves as well, they all seem outsized versus what we get as data, right? And it looks like a continuous pain trade, whether it's up or down.
Yeah, very much, and yeah, big strong rally in stocks around the globe, which we'll look at in a bit. Back to the data. It's not been too much out, but obviously we had some big numbers yesterday. I'm just going to start with the MBA stuff, which I always keep half an eye on. It's not doing an awful lot in terms of the overall data, but as you can see, we saw a quite chunky drop in that mortgage rate as the market, in other parts of the economy, prices in lower rates coming from the Fed. We got US CPI yesterday, which came in all as expected, but we got a confirmation of lower CPI, 2.5%, so that's good for the Fed. But then we got this core CPI number staying unchanged, which really sort of took the biscuit for the market, or put the focus on the market on the fact that was sticky. This core third decimal rubbish ticking the month-on-month number up 0.3%. There was one of the other super core shelter, whatever the fucking thing they look at, which came in a little smidge softer on the three decimals. But overall, the market's probably focusing more on that core number than the headline number. So that was the reaction. We, again, further washed out any hopes of a 50 pip cut in the market on that data. And that's where we're at now. The market is largely a majority behind a 25 pip cut. So any data from now until the Fed that swings the needle in whatever assets towards a 50 is going to get reversed pretty fast again, as has been happening most recently. Any picking? Oh, I would add that before I ask Kay. The wages numbers came in quite strong in that as well. You see that real earnings month on month up 0.5%, but in the year-on-year numbers, average hourly earnings jumped to 1.3% from 0.7%. Average weekly earnings year-on-year 0.9 from 0.4. So there was quite a strong uptick in inflationary pressures from that wages side there. So again, that goes into the fodder of a 25 pip cut from the Fed. Kate, anything you took from that?
No, just that we have to be careful being overly bullish bonds right now, and overly dovish dollars, even though versus some the dollar is weaker today, but I think that's more of a risk play than anything else, as we've seen on various processes. No, I think it's just nails the 25 BP, especially with that earnings supporting. So less of stress, I would say, for the Fed, and that's about it. Yeah, you know what? I think that's what I was saying also earlier. I think the market went a bit fast on selling risk on the back of the core CPI number, because if you get better earnings, that's still not testifying of red flagging. It's a bit of a complicated read, all the data right now, right? But I think I keep it simple. I think that's a 25 BP, and that's it. Moving on now. What's to what the numbers are going to show us.
Yeah, exactly. And we're still in that soft landing situation. You know, you
Yeah.
get one data point that looks a bit weaker, then 5 minutes later you get another data point that doesn't look too bad. And you know, we're seeing these swings, and this is the way markets go. You know, the boat's out at sea, and the people go running from one side to the other, whether it's 25 or 50s or whatever. Now we're sailing into port. The FOMC's next week. We're in that orbit. I think we've still got retail sales data next week before the Fed, so we might get a little wobble on that as well. Michigan data on Friday, PPI data as well, which probably have a lesser effect. But until the FOMC, the market's happy with 25s, so we know what the market's doing going in. So if the Fed do anything different, that will be the shock trade. And then after the FOMC, we play the game all over again into the next NFP, and blah, 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 vice versa, and the boat's back out at sea. So that's the way markets are going to move. I don't expect too much change in rate expectations between now and the FOMC. So prepare perhaps to see a little bit volatility coming down a little bit. Dollar yen is, I'm noticing this morning, is down below 12% in the 1 month vols, which it hasn't been below 12% too often of late. But that's, as I say, an indication that the market is getting a bit more settled in expectations. We had a 10-year auction yesterday, not too bad, Kay. Decent pickup by foreign investors in that one. 76% versus 66% previously. So no real shock coming from that auction at all. Bid to cover good as well, 2.64 versus 2.32. So good appetite for yield. Usually is when yields are expected to come down, interest rates are expected to come down. So, you know, people want to get locking in to some decent yields while they can.
Yeah, absolutely.
Yeah, go on, mate.
No, I said absolutely. It's exactly how it works right now. And then for the time being, I think we are going to see the continuation until we hear from the Fed on. But there could be some differences on short versus medium term bonds. I think medium term we could still see interest and or longer term but I think the shorter term may have run its course, so I wouldn't be surprised if the short-term auctions may show slightly different picture because yields have come down so much.
Yeah, very much, mate. I was just going to point out we had some Mexican industrial production looking pretty good month to month, not as much as last month, but a healthy rise year on year. So if you trade in the MEX, obviously all this focus is on this judicial review vote thing that's been going on there. That's the bigger thing, but the fundamentals are at least on this report pointing in the right direction. Right, let's get into some of the good old bank forecasts. You know, I love them. Citi folded on their 50 pip cut for next week's Fed. They now see 25 pips, but they're doubling down, seeing 50 pips instead in November and December. They stick with their 125 pips in total for this year. They're just jiggling around their 50s and 25s. We'll see how that does in November, going for 50. JP Morgan are reaffirming their 50 pip cut for next week. So they're sticking to their guns on that one. I've been waiting to see what they do with that one. Wells Fargo is one of the other banks who are also thinking about a 50. I haven't seen their updated forecasts yet. The CEO at Goldman Sachs, Solomon, he was out with some waffle saying his best case is a 25 from the Fed, but they could go 50. Nice hedging the bets there. His staff, on the other hand, have said that they're looking to cut by 25 next week. They're also out with some forecasts for the BOE and ECB. They see the ECB cutting today and then sequential cuts from December down to a terminal rate of 2%, which is 25 pips lower than their prior forecast. They also see the Bank of England doing consecutive cuts from November to reach an unchanged terminal rate at 3%. In a poll, the BOE is expected to cut rates by 25 pips once more this year. So say 49 out of 65 economists. with the balance 16 saying they see 2 cuts coming this year. The US election shenanigans are up and running. According to AP Press, the election officials are warning that widespread problems with the US mail system could disrupt voting. Oh, I'm so looking forward to all this crap. On the funding business, Speaker Johnson says that there's no vote on a 6-month stopgap today. That was yesterday. And says that the leadership needs to work through the weekend to build a consensus. And fun and games, again, in central bank trading. Mr. Bostic of the Fed has had his report issued on his trading activities. And this investigation concluded that Bostic violated Federal Open Market Committee rules and Reserve Bank policies governing blackout periods, financial disclosures, and prohibited holdings, and also pre-clearance requirements. However, the report said they did not find any evidence that Bostic's trades were based on confidential FOMC information, and that he did not have any conflicts of interest. The Atlanta Fed are now taking their leave to look through that report and make a decision on what they want to do with that. So yet another Fed official up to no good with his trading, joining the other two. Who were the other two? It wasn't Rosengren. Who was it? I can't remember who they was.
Rosengren and...
it was Rosengren, wasn't it?
Huh?
It was Rosengren, was it?
Yeah,
And,
Rosengren and...
I can't remember who it was.
I don't
It'll come to me. It'll come to me when we're talking about Euro sterling or something.
Kaplan.
Yes, Kaplan. There we go. Kaplan. That was it. So yeah, I don't know what his trading activity was, Ali. I put the report in our chat room. I don't think it has the details on it. There you can see it there. That's all we get. Just that report saying that they've closed that investigation and he's been found up to no good. Right, what else have I got? Just looking through the list. That's it, I think. Trump, like yesterday, in early conversations, apparently he's bottled taking on any more debates, but then later on he said he would potentially debate Harris on NBC and Fox. So he wants to go on the networks of his choosing. So he's back on that frame. Kay, got anything for us?
No, mate. I think we're going to look a bit at what ECB wants to do. For the rest, it's been relatively quiet in anything earth moving. The only thing when we look at rates is perhaps that there's some voices starting to rise that RB and Z may cut faster and harder than what is priced in right now, and it does seem like the Kiwi has found some resistance faster than what the Aussie did. It seems like the market is starting to buy into that view that RB and Z is just too high, above 5%. Yeah, that one. Especially the Aussie Kiwi as well has shot up quite a bit. There you go. We don't hear you, Ryan.
Oh, sorry, mate. I was on mute. Yeah, no, it's shooting up again from that 108 magnet. And I think they're both in the same boat. You know, the RBA is still playing holdout in terms of cuts, but I don't think it's going to be long before they're turning around the other way. So I think this one, you just potentially roll with the punches as one gets more hawkish. You can trade that and then trade when the other dovish, and then trade when the other starts getting a bit more dovish as well. Ali, you're in Kiwi dollar. I see. Where are you? Short at 57. Where are you? Oh, that's a nice trade, mate. Right up into the spike high today. So yeah, nice trade, mate. So that's looking good. You taking any profit yet, or you're waiting? You're waiting. Don't forget, slice and dice, mate. Slice and dice. Right, let's have a look at the ECB. Now, The first thing to highlight is that this is a bit of a funny one, because we've got the ECB adjusting their rates to bring them more closer together. As you can see there, we've got three rates: marginal lending facility, deposit rate, main refinancing rate, okay, all at different levels. And the ECB signaled this previously, that they want to bring these rates closer together. So we're expecting 25 pip cut on the deposit rate and a 60 pip cut on the main interest rate. I don't know what they'll do with that one. It's not really an important number anyway, the marginal lending facility. So as I said, they're bringing these closer in line. Okay, so don't be surprised if you see there's been a 60 pip cut in one of the things from the ECB. It's all expected. What there is a small risk of, it shouldn't happen, but we've always seen stranger things happen. Just in case there's some algos out there that haven't been programmed properly, they might see a 60 pip cut in this and throw a bit of a wobbly. As I say, it's a very low risk thing, but you know, I've seen stranger things happen. We've all seen stranger things happen with that. So just keep your eyes out for any wild moves on that. If it happens because someone's got surprised, then that might be a bit of a fade play. Kate, I wanted to ask you this question again. It's a bit left field. Is there a possibility that they don't cut the deposit facility, but then only go a 25 on the main rate or something like that to bring it closer together? So leave that one unchanged.
The main one that the market is watching is the deposit facility rate, right? Which is at 3.75. Not moving that one and moving the rest, that would be quite hawkish today, right? That would be a very hawkish surprise. I don't think that although we didn't hear from Lagarde really at all. I don't think that's on the cards. I think all of them will be lowered today, but then we'll have to listen and to Lagarde what she says about going forward in October, which she will probably use 1,000 words to say nothing. But yeah, I don't think that they may leave that deposit facility rate unchanged and lower the rest. That would probably, the reason for that would have probably be better growth, but the growth is actually worse than what they forecasted. So no, I don't see that happen, and I don't see how they would change the other ones. Of course, they could always do it just to bring them closer together, but not changing the rates right now would be would really be a surprise one.
Yeah, and just to give you folks a bit of insight why we're mainly looking at the deposit rate here rather than the main interest rate, which is this one, which that's a sort of rate that is the Fed rate, is the BOE main rate, etc., is because reducing this rate, what a lot of banks were doing was getting money on the cheap and parking it at the ECB and just earning the interest. So one of the things they wanted to kick into gear was getting that money out of the deposit facility and into the economy, helping the economy. So that's a reason why the market's focusing on this one, because obviously the lower that rate comes, the less banks are going to earn parking it at the ECB. So that's why that's become important. Matthew saying, yeah, talking on Michael Brown, his ECB preview. Yeah, that's the thing for this meeting, because it's a forecast meeting. Again, this is something that's largely acknowledged that the ECB are only likely to move rates at forecast meetings. They love a forecast, and their forecasts are usually about as good as the banks, but that's what drives their rate moves. That's what drives their decisions, their star forecasts. So yeah, if we do see a big chunk lower in inflation forecasts, growth forecasts, that's probably going to be what will kick the euro lower if we see an increase then in rate expectations. On its own, and this answers Marcus's question, that if they cut again, euro is gaining like always when they cut rates. It's not what they do, it's what the market is expecting going in, Marcus. So the market knows we're getting 25 pip cuts today, with the exception of that in the main interest rate one. So there's no reason for downside in the euro. It's not a surprise. It's not a shock. What the market will move on is what the future brings. Are we going to see the ECB indicating they're going to maybe go on a bit of a faster cut cycle? Is the growth in the forecast worries big enough to indicate that as well? Are they worried too much about growth? That's going to be the driver today. So I think on balance, we're probably going to get a slow and steady approach. I think the German central bankers at the ECB are probably maybe pushing a bit harder for rate cuts, given the state of their economy at the moment. As always, look for the sources pieces after. That might give us a bit of insight into that. And yeah, apart from that, I don't know what to make of else of it. I'm long some euro here at the figure. I'm happy to sit in that. I'd like it to be a bit further away from the figure going into the ECB, so I don't get flipped out on any shenanigans. But yeah, it's really binary. They'll either keep the course, and if they don't make any real changes to forecasts or their sentiment or their forward guidance, we may see the euro gaining a bit. Flip side, if they are sounding a bit more bearish on the economy, then we're probably going to see the euro suffering. How are you looking at this one, mate?
Yeah, the only thing I hope, thanks, Patrick. Just for everybody, I'm positive for COVID the past few days, so and it's decided to kill my voice for a few days, but it's gradually coming back. Thanks, Patrick. Thanks, everybody. The only thing I hope, Ryan, is that in the actual decision, the market is not going to go in some kind of panic mode if they see what those rates are being changed to. And then to me, it's really what Lagarde is going to say, because the 25, I mean, overall accepted 25 BPs is very much baked into the cake. I think the emphasis will be on what they think about growth going forward, and that's going to decide upon the viability of any move, I would say. If they lower the forecast, which is kind of expected, but if they lower it more than expected, that would mean that they leave the door open to more cuts. And that's probably going to be a negative for the euro in the end. Some people think that if she may come up and say like, no, October is less than 100% live. So yeah, then the euro, I can see it rebound, but I'm actually not overly tempted to trade a lot of euro dollar as such. But I'm going to keep a very close eye on what some of those euro crosses do, such as euro sterling, euro Aussie, and things like that, because the euro dollar is going to be perhaps a bit of a strange one, because you can have a less than dovish ECB, yet the dollar doing kind of okay on the next set of data that we have just 15 minutes later. And so I mean, yeah, it's one of those days where I'm not really in a big hurry to trade anything euro really straight away, but I'm kind of okay to counter trade any overreactions in this market. That's kind of the feeling that I have right now.
Yeah, I agree with that, mate. And I'm looking at the euro today, and it does seem to be lagging the others. If we look at the euro, it's down on its lows, not far off its lows. Compare that to cable, which got down to 130. We've had a solid bounce. I know you took a good one in this one. That's had a solid bounce from yesterday's lows, but euro is hanging around. Now, there's two reasons for this. Obviously, the ECB being one. The second is we've got over 12 billion in options expiring between 110 and 110.50. So that's likely the market trading lower vol. So it's not seeing a big move on the ECB. So it's bundling in a load of options around the current price. So I do see a bit of scope here that if the ECB aren't dovish and we get through those options, we do see a bit of a bounce in the euro if we've still got other dollar pairs still looking a bit weaker, still well off their lows, maybe pushing higher. So I'm think even if I wasn't long the euro, I'd still be looking that way anyway. I think there's a chance we get a bit of a catch up, if you like, in the euro if there's no real change in other dollar pairs, or if other dollar pairs are still looking weaker. So that may be an opportunity to look for. So a bit of a catch up from the euro if there's nothing big from the ECB. Otherwise, I've had a little bit of luck, as you need now and again. I came close to getting stopped in this move yesterday. I did say I moved my stops from 84.60. I had it bang on that line for some reason. I moved it to 65, came very close. I have got out the rest of it though at 44, so I'm flat on euro sterling at the moment, mainly because this price action is just on the grind. I know some of you flag waivers will be still looking at this as a bear flag. That's possible. I'm not one for that sort of pattern, but I'll acknowledge those who watch it. This level now is potentially key, this 84.60s level. If we get another test there and it holds, then you flaggers may get your wish and we get a stronger move down. But this is euro sterling. It can bounce off of there and go sideways for 2 weeks. But I'm flat now. I may look over the ECB at a buy into the 84 zone if it's seen, just because this is this price action here. If it holds over the ECB and they're not game changing, then I might think about getting long just to play the bottom of this range, 84s to 86s, and see where it wants to go from there. I'm still eyeing up potentially flipping or going sell stops below this 83.80 level while we're holding it. So fundamentally, I don't see any change between what's going on in the Eurozone and the UK. But if the data does change for one or the other, then that could bring the next direction. So if this UK exceptionalism goes pop, then we could see this one gaining a bit more on pound weakness. Conversely, if Europe falls out of bed, then we might go the other way. So fundamentally, it's even. Technically, we've got some decent levels down here that I might start to play. Dollar CAD, that was another one. Came close again. 2-3 pips shy of my stop on my short up here. So I'm still in that one. It's back down below the bottom of the zone, holding the bottom of the zone as resistance. Again, I don't see this one going anywhere majorly at the moment. It's been pretty steady. We are still in this uptrend, so it does show potential chances for moving back up. But if it can't get through here again, then maybe we're going to have another look lower. So I'm going to be tightening that one up. I've taken a bit more profit because as I didn't get stopped, might as well take some profit on the way back down. Kay, you fit enough to look at a couple, or want me to keep going?
Yeah, I can, mate. I can.
Yeah, I'll pass it over to you, mate.
Right. As I said, I'm going to look at a couple of crosses, and there's one really interesting to me is that these euros. Yesterday I tried short, and then I don't know why I cut it at some stage, but then I went back short. But I'm playing the range here right now, but from the short end. Also, as we know, the Aussie is a bit of a risk currency as well, right? And we see this bounce in equity market, also copper doing a little bit better. I think on any weakness from the ECB, I think this one is going to probably retest this 164.5, and why not go for a little bit of a break lower. I'm still very interested to try and counter trade any bounces here for as long as the risk markets don't drop deeper than what they are now. So this is one that I'm going to keep a very close eye on over the ECB. Rather a rally seller. A move over 165, 40, 50 will probably negate all of this. Um, and yeah, I was also going to look, and somebody mentioned dollar Swiss. Last week I bought, or earlier this week, last week it was, bought a bit of a call. Yeah, that was here, I think. Yeah, last week, or around the NFP. I bought a call in dollar Swiss. Being one of those where if risk is holding up well, and if the S&B may get a little bit nervous, and then people now thinking that S&B may go a bit bigger in the cut end of month as well. But we came to levels, whether it be on the euro Swiss, on the dollar Swiss, on even sterling Swiss and things, came to levels which were pretty low. So I'm not in cash in this one, but I'm, as we can see, it's starting to make a move. And I think this is one where if you look at dollar pairs on to the side of the better dollar, this is one that can actually start to creep higher again. I think I had something as well on the dailies. You see, it came close to a descending trend line and then started to bounce. 80, 85 and a half, we are close here. 85 and a half, 86 are going to be interesting levels. If we start to get back above 86 during the course of this week or next, I would say, and also into the FOMC, this is could be a potentially interesting move. Okay, so this one is one where I'm rather playing the recovery of the dollar and the top end of what Swiss may have ran in sympathy also with the yen. Yeah, gold is still in its range, but interesting as well is that we continue to try and get closer to that break zone. So again, this is one where I think that it's not going to take too much of negative data for it to go for a walk. 25 and a half next, and then above 26 and a half. But so the downside is very, very clear here too. You got about 25.05 in the middle for those trading like really short term, and then 24.90s, but more or less that 24.78 is your big support zone. Still the same. Silver is yeah, there's a bit of a trend line here as well, but I think it's much more unclear. But if we continue to get numbers which are not really too negative, this could actually continue to go as well with gold eventually, and revisit 30 at some stage. Yeah. Yeah, I need to show this one, dollar rand, because um, we're again knocking on the door here of the 18, the big figure 1802, where we stopped prior, and here as well. This is one proximity to the BRICS, proximity to China. It seems like the honeymoon with the current with the new government is being really put to the test. On any more dollar strength, or a bit of risk off, and you can see we're banging our head against 18 despite risk coming back. Usually it would be a pretty decent risk currency as well in theory, but despite all of that happening, we're coming back. So I think a break above 18, 1802 or 4 could see a bit of a move higher on this one. This is one that I'm keeping a very close eye on. And if you want to steer away from majors, no, it's not the euro stocky that I wanted to show. It's the dollar stocky. You see, we are on a very medium term downtrend, but it's come back pretty decent. And as I was saying, and as I looked at those data in Sweden are not really great. So this is one where if I see some more downside here, perhaps around 1028, 30, I may give it a try and try to catch this retracement, and perhaps for a bit of a move higher. Those are like a bit of the currencies out of the ordinary. If you want to look at something something different from the usual. Yeah, Aussie, I think it's held relatively well down here. We had this spike lower on that steep drop in equities, but then equally went higher. And I'm a bit in between two minds here, and I perhaps, because I'm a little bit long Aussie yesterday, I bought it, went out, and then bought it back. Sold a few out here, but I'm a bit in two minds here with the US coming up, whether I'm keeping it straight into in Aussie dollar long, like being long Aussie, is still something that appeals to me. So, but I may post ECB decide to get back into Euro Aussie or so, or a different Aussie cross, Aussie Kiwi perhaps. But then I'll decide. And unless we start to break above 67, 10, 15, then I think there's more to go up to mid 67s. Right. I think Ryan, that's good enough for me for today, mate.
Yeah, thank you, mate. Good stuff as always. Let's just have a look. Anyone got anything else? Are we looking? Tarek, yeah, there's a lot of confluence down there. Down to 10, I've got 109.90-ish as a low point. There's a bit more down there underneath it. Still a decent support level, but we're 18 pips off it going into the ECB and a ton of options. So anything could happen. Right, on that note, we shall leave it be for today. Do trade safe over the ECB. Hopefully we've got you set up to look at that one. So there should be no surprises. Have a great day other than that. And we shall see you for the review tomorrow. Have a good one, people.